We're going to do a quick video on NIO Stock, NIO News Today, and we've got a daily chart on here for you with three moving averages: a green 5-day, a red 20-day, and a blue 200-day moving average. This stock's got some good volume today, 20 million shares, and it's not even 10 o'clock yet, so we're going to take a look at it. Let's go back, take a quick look at what's going on. Let's go back here to this not absolute high, but this recent high in July of 21. We can see that we had stabbed down here below the 200-day moving average as the moving average was still rising, and that failed. We came up and put in a top here, not a higher top, but it put in a top in July of 21, and then we crashed back down through what ultimately turned out to be a peaking 200-day moving average. Now, this kind of peak in the 200-day moving average is really kind of unusual to see, but it's because we had such extreme volatility in the stock price. But to get to the point, we broke down into a bear market right here, roughly in August of 21. The stock essentially went into a bear market and began to somewhat respect the 20-day moving average, and you can see put in a low here in October 21, rallied back up to a test for about 3 weeks of the 200-day and crashed down again. This was just a continuation of this bear market here, and we went into a serious bear market and took a lot off this stock. We dropped down to about a third of the value, and a very serious decline in this stock from about December-ish of 21 until about May of 2022. Through the summer, we rallied up into June here, and you can see we've essentially been going sideways until about the last week in August. Now, you'll notice we got too far away from the 200-day moving average. Whenever you get this much white space between the stock price and the 200-day moving average, you're going to get a correction. You can see we got that first here. We went down again and put too much white space in this area, and then you essentially came across and ran into the 200-day moving average, and that's the way you see these stock prices go. You can see this area expanded, and this width, if we call this a triangle, this width got wider down here until it collapsed and the price got back along the 200-day moving average. Now that it's doing that, you'll see that it's put in a series of lower highs. Never a good thing when you're talking about a stock in a bear market. Essentially, it's put in its bottom here on the 12th of May, but it still hasn't shown us that it's out of a bear market. If you squinch this down, you can see this is a stock that's in a serious decline. So if we go and we take a look at it today from the perspective of what do we think is going to happen in the future, is this bottom going to be tested again? I don't know. I think that there's a shot that it could be, but I kind of doubt it. I think that this stock is probably in a trading range. And if we used this $11.67 as the bottom and this $24.43 at the top, we'd come out somewhere around in this range right here. Let's call it 17, 18 bucks. So it's kind of oscillating around that, and I think that it's probably going to continue to oscillate around that. You'll notice that it stayed above that price for a significant period of time, but I think that's because it had to just come across here and get to this 200-day moving average. When you're in a sharp bear market like this, there's very few people want to step up and buy it and say, hey, it's gonna rally. And I think they need technical help to confirm their decisions. So my best guess on this stock, and it's just for entertainment purposes only, it's my opinion, this stock will probably trade down to about this $14 level by the middle or third week of September, this low $14 range. That's my best guess. And then I suspect you're going to see a rally up in this stock of about the $21 range here by late September, maybe even probably late September. But again, all my opinion, it's a guess. Who knows? But that's what I'm looking at right this second. Low 14s for this decline, and then a rally up probably in around the $20 range. We've got to get to get out of this bear market. You have to get the price above the 20-day moving average and above the 200-day moving average, right up around in this range here, and in this $27 range. You've got to get some firm closes above it and get this 200 days to start to flatten out a little bit. That's already happening. You'll notice it's starting to flatten out. So short term down a little bit to 14 or so, and then a rally back up to 20. Longer term, if we're going to do it, and it's highly speculative, but if we're going to do it, got to get up in the mid to high 20 ranges and confirm closes above the 200-day moving average supported by the 20-day, and the price has to respect the 20-day just like it essentially did here. Wasn't perfect, but it was pretty good. So if we get that, we should be out of a bear market on the stock. Absent that, let's say we go up and we bounce off the 200-day, the stock can go down and make new lows. So that's my best guess. Again, for entertainment purposes only, you've got to do your own research. Let's go down here and take a look and see what RBAM Research says about it. We cover this stock. NIO is right here. This is a sheet for today, September 7th, and it has 1, 5, and 20-day algorithmically generated buy prices. It does cover, this RBAM Research does cover NIO, and today it's indicating entry prices for your entertainment purposes only from 1666 to 1702. So I don't think this is trading today's price yet. Let's take a look. It is. So it's trading today's price. Let's see what's going on here. Looks like today, the 7th, we've got a low of $16.54. So it looks like $16.54. So it looks like all of these have been hit today. So again, for entertainment purposes only, you have to do your own research, but our algorithm says this stock is a buy in this range, and again, that's purely speculative. You have to do your own work. But what that means is buy today, close out end of one trading day, which would be the end of the trading day tomorrow at a loss if you didn't get a profit, or take your profits as soon as you get them. Same thing for the 5-day. Buy today in this range, assuming your own analysis says it's a good idea. Close out worst case at the end of 5 days, 5 trading days at a loss, or take your profits as soon as you get them. And same thing for the 20. Now, what does that mean? It means that if you bought at 1666 today, and we're currently trading at what? Depends on where you look. I've got some prices on one screen saying 17 something. I have a price on my screen saying 1763. So you potentially could be up almost $1 today on this one-day trade. You close it out because you're making a profit. So that's how these work. They come out every morning before 7 a.m. They're absolutely free, no credit card required. You can get them all, 190 of them, at rbamresearch.com. We also cover the major forex pairs. We cover BTC crypto and the most liquid futures. Again, you can get them all at rbamresearch.com. There's a link in the description below, and again, they're absolutely free, no credit card required. You just follow that link, go over there and sign up, and get them all before 7 a.m. Monday through Friday. If you like this video, please click the like button. If you want to subscribe, please do that. If you have a comment on how we can make these videos better, we'd love to hear it in the comment section below. Please leave one. And keep in mind, everything you've seen or heard on here, including our entry prices, are all for entertainment purposes only. It's all in our opinion. You have to do your own analysis. You can't use our prices for anything other than entertainment, and you definitely trade at your own risk.